Not even a day has passed since the significant crypto drop. It is a sight to behold, though, when you consider the daily view here in the market. Overall, we are witnessing losses of 20 to 30 to over 40%, with the majority of the top-tier ancient coins, such as H-bar, down 18.5% over the past day. Furthermore, a few other altcoins like XRP, XLEM, and QNC are losing more than 12% every day. The question here is whether this is the beginning of the bear market or if it is the final severe correction before the market's biggest run-up. The second option is what I'm betting on. We'll discuss why here shortly. However, let's quickly examine the market-wide perspective. Therefore, based on Bitcoin's daily decline of roughly 7.5% through week 8%, Ethereum's 11.6 and 14.5, and XRP's 12.3 and 17.3 overall, we've suffered some quite large losses. As I mentioned earlier, XRP isn't the worst of all of them. We're down nearly 80%. Some ancient coins on only one wick. Therefore, in comparison to other losses, some of these are not even that big. It is really difficult to navigate this period, particularly if you are new to cryptocurrency. We saw this practically every other month in previous cycles, but I don't want to bring up the reason. But we did, didn't we? This is not a novel situation. Volatility is this. Like this space, the upward movements are undoubtedly erratic, but they are equally as erratic when they are falling as they are when they are rising. Therefore, we assume that everything is finished when we witness volatility like this. It's finished. And we believe that this is only the beginning when we see things starting to go crazy to the upside. It will just keep going. It's all feelings. However, I want you all to know that we will overcome this terrible transition. In the world of cryptocurrency, this is nothing new. I want to discuss a few topics now. First, let's examine a few of the most important charts. For instance, the total, also known as the old coin market. This level was a fantastic retracement down here. All the way back to 2024, it was a retracement back into key demand zones. Due to the fact that we are discussing a single everyday candle from top to bottom, this wick was also very important. This was a decline of more than 21%. We're not the lowest tier, mind you. Simply said, this would be the ideal moment for us to drop to the bottom of this chart. And I want to go all the way back to one particular candle that everyone in cryptocurrency remembers, even if we just look at the weekly views here. And the COVID crash is that. We saw a 65% decline in the cryptocurrency market in a matter of weeks, and we're talking about around a month. We are currently down 24% in terms of our overall view. This fix is quite typical. Since there is a lot more money involved in this market, I am aware that it doesn't appear to be. This was a loss of $1 trillion. However, in a market as volatile as cryptocurrency, this is typical price movement. Now add the entire 3 on top of the total. I did anticipate that this would sell out. It simply did not sell off as much as I had anticipated. Here, I thought we would continue to hit some higher lows. Even while the April low did signal the bottom for all markets, our WIC is still higher than that level. On a single weekly candle, though, this is unquestionably a substantial sell-off for the old coin market. We fell more than 46%. As far as drops go, this is extraordinary. The daily is a very good way to approach this when considering some of the lesser time frame structures, such as the 3-day or even the daily. We are getting important support. The first level, which is around 691 billion, is where I was expecting we would find support. However, RSI is the primary focus of my attention here. We dropped to about the same level in June as we did in April. The fact that the RSI is so near to those bottom marks indicates that we may cut a little bit further over the weekend. However, we ought to be bottomed out at current levels. Actually, this current move ought to represent the market's bottom. If not, I would contend that the cryptocurrency market is effectively about to enter a bear market. Although I don't think we are, I'm simply stating that if this weren't the bottom, that's what I would be looking at. The total is no different. Since I'm examining it over a shorter time frame, the trend line will obviously appear differently here than it would on the daily. But the view of the day, March is here, or rather February into March this year. April, which did mark the bottom, is shown here. There's still some work to be done on our RSI. As I previously stated, we might cut a little bit further before the weekly close. Once more, the primary goal of the weekly closure is to simply close above some of these lows. In the end, I want to close over 3.71 trillion. Additionally, I would like to close slightly above this trend line. Here, we really just need to wait and watch how things develop. And when it comes to stocks, I'm really hoping for a little bit more pain. I know that seems weird, but I'm aiming at anywhere between 64.46 and 65.21. That would merely involve retesting a few of these earlier highs, and after that, we most likely keep going to 7K plus. We might be able to see that April bottom in stocks. RSI just experienced a comp wipeout, which is basically an RSI reset. In any case, we required this reset. Prior to the sell-off, I discussed it in a few videos, pointing out that the RSI was quite overbought, and examining this issue on the weekly that overbought area is still visible. We recently breached the moving average. Looking at the lower time frame structure once more, I do believe that we are in a little more pain. At the same time that we were pumping higher, the RSI was already printing bearish divergence. We therefore anticipated that there would be some kind of severe setback, albeit not as big as what we really witnessed. Technically speaking, though, this is quite healthy. Now, Tom Lee is one person that is really kind of to follow around here. Tom Lee previously stated on CNBC that stocks may rise 60 points in a week, and that today's drop appears to be a buy-in opportunity. Take a look at this. It's just one day, Tom, so have fun. We understand. The market is still in a bull market. We heard it before, undamaged. However, your thoughts on today's action and potential future developments? Well, Brian, it might be rather past due. We've experienced a pleasant 36% increase since the April lows. And the decline today, in my opinion, is the largest in over 6 months. However, the VIX increase is encouraging. As you are aware, today's VIX jumped at 1.29%. That was the 51st greatest VIX jump in history. We are therefore a top 1% move in what I would describe as the market looking for safety. Therefore, I believe that today's flush is good. The market is, worried, but as your other guests, particularly Rick, have stated, this retreat is a buying opportunity unless there is a true structural change. Whoa, the VIX's 51st largest move. Why, therefore, is the VIX responding well? What does that indicate? It demonstrates that investors are looking for security. Thank you for viewing. Goodbye.